A lot of people are afraid. When it comes to taxes, it's just scary, it's intense, it's unknown. Taxes don't follow you to the grave unless the clock is still running. What we do with Nationwide Tax Solutions, our company was formed with the purpose in mind to provide assistance and comfort to people who find themselves the direct target of IRS enforcement. Welcome. My name is Injil Muhammad. I'm a CPA. I'm the president and founder of Nationwide Tax Solutions. Our company was formed with the idea in mind to be a buffer between our clients and IRS enforcement. We all know the IRS is very aggressive, and I guess my attraction to this area is rooted in my childhood, in that when I grew up, I always was the guy that fought the bully. For some reason, I was always that guy that would fight the bully. I'm not saying the IRS is a bully, but they can be perceived as such at times. So what we do with our clients, once we solve their problem, we put them on the right track where we have what is I call an intelligent relationship with the IRS. We provide tax planning strategy, investment management strategies, because with the IRS, there's a lot of things they can do to you, but there's also a lot of ways for you to defend yourself. So what we're going to do tonight is that we're going to talk about the IRS's weapons of mass destruction. We know they're powerful, but we can handle them. We're going to talk about how to cut the IRS down to size so that you can have what we call an intelligent relationship with the IRS, so that you kind of know what they're doing. The scary thing about the IRS is that when they come after you and you don't have that communication, you're not sure what's next, okay? And then we're going to talk about how to protect your wealth from the IRS. And we're going to talk about our approach. What do we do when we receive a case in our office, our systematic approach that you can utilize, or you can have us handle it for you as well. So what can the IRS do? The first thing they can do, the IRS has the ability to file a lien against you without going to court. As you know, in business or whatever, when someone before someone can have a lien filed against you, they have to go to court in order to get that lien filed. The IRS skips that process, which means they can go directly into your bank account. They can go directly to your employer and take money from you. All right, so that's a benefit on their side, but this is something that they can do. The IRS will prepare a tax return for you if you don't file. We all know that we're supposed to file a tax return annually, right? If you're required to file. If you fail to file a tax return, the IRS will file that return for you. Not only will they file that return for you, they will send you a bill. And not only will they send you a bill, they will come after you and take the money out of your account if you ignore them. So this is a very important aspect. The IRS will file a return. Now, where do they get the information from? W-2s, 1099s are reported to the IRS. And if you don't file, they take that information and process the return and send you a bill. Okay? The IRS can send you to prison if you don't file a return. You can owe $1 million as long as you file, you're not going to jail. But if you don't file tax returns, the IRS can prosecute you for not filing a return, if you're required to file. Your passports, this is relatively new. If you owe the IRS more than $50,000, the IRS can stop you from traveling abroad. You can owe $50,000, but you have to have an agreement. Okay, you don't have to pay the whole thing off, but if you don't have an agreement, you can't travel. So you definitely don't want to be away and this happen to you. So if you owe money, you want to make sure that's under control, especially with the new administration, but we'll deal with that another time. Okay, how do we cut the IRS down to size? The first thing that we look at in our office is that we usually use 3 rules. Most of the cases we solve are centered around 3 rules. And the first rule is that the IRS has 10 years to collect taxes from you. So what do we mean by that? When you file a tax return, a clock begins to run. And the IRS has 10 years to collect those taxes from you. So if they don't collect the tax from you, guess what? You don't have to pay. All right? So it's a 10-year clock. Taxes don't follow you to the grave unless the clock is still running. Now, there's some things that you can do to stop that clock, which we'll talk about a little later. So the first rule is that the IRS has 10 years to get you. The second rule, and again, most of our cases, 80% of the cases that we work with, we solve them around one of these 3 rules. The second rule is that back taxes take a back seat to your current bills. So in other words, you have the right to pay your rent, food, clothing, and shelter, taxes, transportation, insurance. Once you pay your current bills, the IRS gets the remainder. So if there's no remainder, they don't get anything. All right? So back taxes take a back seat to your current bills. And the third rule is that your current taxes are more important than back taxes. What are we talking about here? When the IRS comes after you and you owe, let's say you owe $100,000, okay? The main thing that we do with our clients, we make sure they're paying their current tax, because your current tax is more important than your back tax. Why? Because the IRS wants you to be in the system going forward. They know that this clock is running, okay? Now, they come after you very aggressively, but the reality is your current taxes are superior to your back taxes, all right? So if you, let's say, for example, a person sets up an agreement, and the agreement basically says that they can pay $1,000, all right? But you're not paying your current taxes. Once you file your return again, you're going to owe money again. So we'll take from that $1,000. We say no, $800 needs to go towards your current taxes. So therefore, I pay $200 on my remainder on the old taxes. So these three rules are sort of what we use in order to solve most of the cases. All right. So again, there's a 10-year statute. The IRS has 10 years to collect from you. Back taxes take a back seat to your current bills. You pay your bills first, and then your current taxes are more important than your back taxes. Okay? So that's what we talk about by knowing the rules. You want to tell your story. In other words, when the IRS receives a file from you, they may say, okay, a person owes $150,000, and they look at it as that you're not in compliance, and they're angry and they come at you aggressively. A couple of years ago, an elderly woman comes into my office, and she had a bill with the IRS for $160,000. The IRS actually took the money from her brokerage account. So she walks in my office. She's on Social Security. Social Security was being levied, meaning they were taking her Social Security. They also went into her brokerage account and took her money. So she's an old elderly woman. Reminded me of my grandmother. Okay, so I was like, I really want to help this woman. So I said, well, what happened? Her husband passed away. He dealt with the finances. She received Social Security, so she felt that she didn't have to file a tax return because she only had Social Security. But what happened is that they had a brokerage account, and she was buying and selling securities. So when you buy and sell securities, this is what happens. Remember I said that the IRS gets information reported to them? So when you sell a stock, the IRS gets this reported on a 1099-B. This is all your stock sale, okay? So back then, the cost basis wasn't sent to the IRS. But we know that capital gains are the difference between what you sell, your selling price, minus your cost basis is the gain or loss. So what the IRS just received was the selling price. And since she didn't file, guess what they did? They took the selling price, added it up, no cost basis, and they sent her a bill for $160,000. Then she ignored it because she's elderly. She's thinking she doesn't have to file. They go in her brokerage account and take $160,000. So we get the case, and I said, okay, well, we have to file your returns. We have to file your tax returns so that we can show what the cost basis was. But before we can do that, we had to do research and get the cost basis. So I wanted the IRS to release the levy on her Social Security because she can't pay her rent. So we made it a human story. We explained husband passed away. She's elderly, she can't pay her rent. The agent said, no problem. I said, but he would not give us the $150,000 back till we filed the returns. Now here's what's important. When the IRS takes money from you with a levy, you have 2 years to ask for the money back. Otherwise, you don't get it. So when she came, she was lucky. She came in my office. They took her money 4 months before she came to see me. So we were in the 2-year range. So we moved quickly. Got the cost basis, had the returns filed, and guess what? She was due a refund. She didn't get a refund on the tax returns because they were late, but she was able to get the $160,000 back because we did it within the 2-year period. Okay, so it's very important when the IRS takes money from you, remember that you have 2 years to get it back. Otherwise, it was a donation. All right, so we were able to get her back on the right track, all right, by telling her human story. You want to keep your word. A lot of times when people set up an agreement, an agent may be aggressive and say, you can pay $3,000 a month. I had a doctor in my office a year ago. He owed $400,000 and he was paying $4,000 a month. Now he's making good money, But again, $4,000 a month is a lot of money outside of your regular bills. He was choking. We wound up doing an orphan compromise. We stopped that from happening because what he did, the agent forced him into an agreement not based on his financial condition. It was based on, it was almost like a wolf ticket. So he felt, okay, I can do it because he wanted, but he couldn't do it. So don't bite off, as old people used to, don't bite off more than you can chew. Keep your word. Again, pay your current taxes. This may sound corny, but this is the solution to IRS problems, to remain current. They want you in the system going forward. They won't say this, but the old taxes, they know they're going to write it off. Remember, there's a 10-year statute. All right? There's a 10-year statute. So pay your current taxes is critically important. So now we're going to talk about how do you defend yourself. So you have an issue, the IRS is coming after you. What is your plan? How do you defend yourself against them? So we're going to talk about your protection toolkit. In 1998, a little before that, the IRS was heavily in the news on 60 Minutes because they were beating a lot of people up. They were just taking people, assets, not giving a warning. So Congress kind of wheeled them in, and there were a lot of law changes that took effect that helps taxpayers now. One of them is the collection appeals process. Before the IRS can levy you, meaning before they can take money from you, before they can go to your bank, before they can go to your employer, they have to give you a final warning. That final warning basically says it's our final notice of intent to levy. The reason that's important is because after that date, you have the right to stop them from what the action they're going to take by filing an appeal. And the appeal has to be timely, okay? So this collection appeal, there are two types. There's the type that stops the collection, and there's a type that may stop the collection. The one that stops the collection basically is this. If you file the appeal timely within 30 days, you can stop the action that they're bringing against you. If you wait past 30 days, then you're giving the IRS the power to decide whether they're going to stop it. And that's what that calls an equivalent hearing. So if you're timely, you can stop them. So this was a new rule that came in. So that's one thing in terms of your collection appeal request. You can stop them from coming after you. We talked about the 10-year statute, but let's go a little deep into it. The code section, for those who want to look that up, is 6502. Now, years ago, I was having lunch with some attorneys and other CPAs. It was 10 of us having lunch, and 3 people in the room knew about this other than me, and these were CPAs and attorneys. People just believe that this is not true, that that there's no collection. There's a time frame in which the IRS has to collect your taxes, and it's 10 years. But there's actions that you can take that give them more time, okay? One of them is filing an orphan compromise. What does this mean? An orphan compromise, which we're going to talk about, is a settlement. That's when you go to the IRS and you cut a deal. When you fill out an orphan compromise form, the IRS cannot come after you. Collection stops. So if collection stops, they give themselves more time on the balance, on the end, okay? Bankruptcy. If you file for bankruptcy, thank you, make yourself comfortable. If you file for bankruptcy, the IRS, it doesn't mean your tax is going to be discharged. It could, but it's not necessarily. But the collection stops. So when you file for bankruptcy, collection stops, and that adds to that 10-year statute. Okay? So if you're in bankruptcy for a year, you're going to add another year to the collection statute. If you file an orphan compromise and it takes a year, you're going to add another year to the collection statute. Okay? There's a form called Form 900. I think it's one of the worst tax forms around. This form, if you sign it, you give them more time to collect. This is one of these bully situations. It's called a waiver. The IRS is saying to you, okay, we're going to put you in an agreement. We know we don't have enough time to collect, so we're going to ask you to add more time to the collection statute. Okay? We talked about an appeal. Remember we talked about that appeal? When you file a collection appeal, it stops. It adds more time. So sometimes you may not want to file an appeal because your time is running out, and then you're giving them more time. You may need to file an appeal, but you have to weigh that. Should I do it? Should I not do it? Because when you file an appeal, you give them, that clock keeps running on the collection.